Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, May 15th, 2023. There really isn't anything to be adding to current analysis or even the levels that which we're looking for. The market continues to trade in a very tight range. We did here in the NASDAQ start to head up towards the high of the range. And so I'm going to take the count as that we're inside this minute fifth wave up. It is kind of turning into a diagonal, now getting even sharper as we approach this pinnacle. And so far, I'm looking at it as if we've completed wave 1, 2, 3, 4, as deep as it is. And now we're into A, B, and into a C wave for wave 5. Now, that would suggest that we complete this likely tomorrow or very close thereafter. So where are our resistance zones? 13,493. That's the first one up. Then we have 13,532 to 13,551. Again, what's going to put it over? What's going to drive it? We've had so many things that could come through. They're not coming through. We're seeing the bond market continuing to decline a little bit. We're seeing just a market that is having a lot of difficulty getting out of its own way. So there's nothing really to be adding. Excuse me. So I'm continuing to look for this little bit additional upside. Now, beyond that, if it really decides that it wants to give a pretty strong boost, we do have additional levels up at 13,732 on the C wave. But if we're dropping inside for this minor wave 5, then we still have 13,551, 13,640, 13,650, 13,680, 13,732. We have plenty going up. And I'm just wondering, what would it take for the market to get pushed to that level? Again, this week, tomorrow we have, again, Fed President speaking early, and that's the Fed President Meester. He begins speaking at 8:15 a.m. 8:30 a.m. Eastern, we have U.S. retail sales. 9:15 a.m. Eastern, we have industrial production, capacity utilization, business inventories at 10 a.m., etc. Then we have additional Fed Vice Chair Barr speaking at 10 a.m. Eastern. Richmond Fed President Barkin speaking at 10:30. New York Fed President Williams speaking at 12:15. Chicago Fed President Goolsbee, who's going to be on TV at 2:30 p.m. Eastern. And then we've had the Atlanta Fed President Bostic and the Chicago Fed President Goolsbee. He's a very busy man. At 7 p.m., they're speaking on a panel. So all the Fed governors are out, stumping, talking it up, et cetera, et cetera. More importantly, we have retail sales, industrial production, capacity utilization, and business inventories on top of all of the Fed speakers. So we don't really have any groundbreaking numbers tomorrow that really could push and shove the market around. As I basically stated on yesterday's update, we had the Empire State Manufacturing Survey this morning. Came in pretty, as one person said, crappy. Compared to the previous was a plus, and then we had a big minus today. But that's being held in New York State manufacturing. I don't know. So initially it had somewhat of an effect on the market when it first came out. That would have been right there. And then nothing. And then basically nothing. So again, no real changes. Moving averages, flat to still following the market higher. Over in the S&P, we actually, again, we're just getting tighter and tighter in our ranges. And it is almost as if we are getting somewhat of, not sure how I'm going to count it, but we have a flat bottom and a declining top. Let me just show you. We can kind of go like that, and then we can kind of put this across, oops, across the bottom. Come on. Across the bottoms here. So declining. So what is it going to be? If we're having this basic 1, or is it a 3 and this is a 4? Or is it an A and this is a B? It becomes a little bit more difficult. We can go as far as to say, we're not even in the 5th wave yet. NASDAQ can't say that. NASDAQ continues to make new highs. The S&P stuck. Well, what if this is an A? This turns into a 3, so it's a B. And then we have this as a C, this is a D, this coming down as an E wave. Coming up and then coming back down as an E wave. Could that work? Well, it could. It could. And I'll show you that one. And again, these are just, it may feel like I'm grabbing at straws because honestly, you're trying to look at every single possibility that we have and see which one. It's like throwing spaghetti at the wall and seeing what sticks. Yep, it can almost feel like that. But if this is going to be an A wave and this is going to be C, we got a nice triangle, another triangle here in the S&P. And it does fit. But again, what it'll be is a minor 4th wave. Wherever it comes in over here, it could be a 4, we shoot up in a 5th, be done. That's just a possibility. Notice, I'm not labeling anything. But saw it today during the presentation that I did on the timing research CFN show, which I have also posted here on YouTube. That's where the moderator, Jim Kenny, who I do a lot of shows with, he pointed it out basically. And then I said, wow, Jim, I think you just pointed out a triangle. And if it is, wave A, wave B, wave C, wave D, wave E. And that would portend that we are, boom, out of here. At least for a thrust higher. And then finally, maybe get up above 4203, 4220, maybe even up into this area. So again, these are the numbers. And we can continue to build on all of that. But right now, I'm kind of leaving the spaces open. It can get pretty clogged up inside here. Need to get above wave 3. C needs to get above wave A. Both can be accomplished on a move up into this area. And a triangle pattern giving the boost or a thrust out of it could give us a good head start. So that's where I'm going to leave the S&P. The NASDAQ still, it's a little bit more difficult. Both are not really moving. They're moving in the same minor 5, possibly, or, could be the minor 4 and the minor 5. But there's no way that we can do that same type of a structure here in the NASDAQ since it's already gone up and made new highs. So we're just kind of waiting for everybody else to catch up here. NASDAQ seems like it's waiting for everybody else to catch up, and eventually it will turn. So we kind of are having a little bit of divergence between the markets. And we're going to see. We'll see what happens. Bond market does continue to break down. I'm just going to include that today because it remains of interest. Now, I've kind of put together, taking back what, if I took the labeling off of here, you'll notice. And that kind of would suggest that, okay, what if wave 2 completed here? We're at that point where it's like, okay, don't go too much more further below all of this 30-year bond, because then you're starting to look like you're going to break down and get back into what I would term as, again, let me go out to my 4-hour chart so we can see it. If I'm putting the 4th wave here, that the 30-year bond still needs to come down in a 5th wave to complete that initial A wave, which the 2-year, I believe, is already done. So is the 30, the 10, and the 5-year, are they playing catch up to the 2-year? Or is there something going on in between there? So if I have that in mind, then what I'm looking for is a minor fifth wave consisting of 5 waves of minute degree. That would be minute 1, minute 2, or as I have been suggesting, it's a little bit more complex, wave 2. But it may not be. If we start breaking down here, yes, we can actually go probably, I would give it all the way to 129.10 before the structure itself starts to look a little bit like, no, we're not getting a double. This isn't an X and this is an A and this is a B. B should not break below the A. Can in an irregular, but this is not really looking irregular. It's looking rather impulsive. Still difficult, but impulsive. But here we are, holding, moving sideways. Everything is seemingly on hold. And primarily, I think it's because of the debt ceiling conversations. And we continue to read the news like it is right here. A U.S. default would destabilize the financial ecosystem that investors swim in. That's an interesting statement. That's what a strategist is coming out and saying. So, although while the likelihood of a U.S. default still appears to be a long shot, concerns have been growing. Treasury Secretary Janet Yellen reiterated a warning on Monday from early May that a U.S. default could happen as soon as June 1st unless Congress raises the federal government's borrowing limit. We continue to see through the auctions that the government's having to auction higher. Those are the auctions that are happening now. Okay, so let me just kind of go over and show you. We have the 26-week auction. While the high rate was 4.9, the investment rate was above 5%. So, and there was $139,583,813,000 worth of Treasury bills tendered, but 57 billion were accepted. So they continue to make adjustments to the balance sheets. This, we're seeing the interest, the rates themselves continuing to go up. 13-week, the high rate was already now 5%, 13-week, 5%. Remember, 4-week, we saw 5%. 8, we again see 5%. 13 now above 5%. So again, you're auctioning them off because they need to get the money in now to pay the bills. So they're doing their best. But I would determine that if the government shuts down, additional auctions won't be possible. So business stops. And it really is a dangerous situation. But we're going to sit. We are going to sit and we're just going to wait and see. What trading are we seeing? We're seeing a lot of trading again in the zero DTE options. Traders can come in, big firms, they can come in and they can continue to trade because they get to pin it. It goes out settled in cash. Everybody goes home, either happy or not so happy, but there aren't any overnight positions. It all expires, settles in cash. Done deal. This is the type of trading that will continue to really dominate the market while we sit in this little pause or hold position until we get more information about how the debt ceiling is going to go, what the Fed plans to do or not do, et cetera, et cetera. So here we sit. Here we wait. This is where I'm going to end it for today. Thank you very much. And our next update will be on Tuesday, May the 16th.